All right, today we're diving into something that's honestly one of the smartest employee benefits out there, but so many people don't even know they have it or how to use it. We're talking about Section 125 cafeteria plans. And trust me, you're going to want to stick around because this is all about how you can make your paycheck go way further.
So let me just start by asking you this. How would you like to legally, and I mean totally legally, shrink your taxable income and actually keep more of your hard-earned money? Sounds too good to be true, right? Well, that's exactly what a Section 125 plan is designed to do. Okay, so here's what we've got on the docket. First, we'll hit the big idea, the pre-tax perk. Then we'll walk through exactly how these cafeteria plans work. After that, we got to talk about the rules. Super important stuff there. And finally, we'll wrap it all up with why this matters so much for you and your employer. All right, let's jump right in. Section 1, the pre-tax perk. This is really the core concept, you know? It's the secret sauce that makes these plans so incredibly powerful. So what in the world is a Section 125 cafeteria plan? Well, the official definition talks about a written plan and choices, but let's break that down. Think of it this way. Your employer gives you a choice. You can take all your benefits as cash, which gets taxed, or you can use some of that money for specific qualified expenses, like health insurance, before a single cent of tax is taken out. And that little choice, it changes everything. This is where it all clicks. Seriously, look at this comparison. Let's say your gross pay is $2,000. Without a plan, you pay your $200 insurance premium after taxes, so you're taxed on the full $2,000. But with a Section 125 plan, that $200 for insurance comes out first from your pre-tax money. See what happened? Your taxable income just dropped from $2,000 to $1,800. It's the same expense, but just by doing it pre-tax, you pay less to the government. It's like an instant discount on things you were going to buy anyway. Okay, so we get the what and the why. It saves you money. Now, for Section 2, let's get into the nitty-gritty of how. How do you actually use one of these things? We're going to map it out from the moment you sign up to getting your money back. You know, the whole process is actually pretty simple when you break it down. It all starts during your company's open enrollment period. That's when you decide, okay, I think I'll spend X amount on medical stuff this year, and you elect to set that money aside. Then your employer just deducts a little bit from each paycheck to fund that account. All pre-tax, of course. So when you have an expense, like a trip to the doctor, you just pay for it, submit the receipt, and boom, you get reimbursed from that tax-free account you set up. And this is exactly why they're called cafeteria plans. It's like walking down a lunch line and picking what you want. On the left, you've got all the good stuff you can pay for with your pre-tax dollars. Health insurance premiums, HSAs, flexible spending arrangements, even dependent care for your kids. Now on the right, you see other benefits your company might offer, like gym memberships. Those are awesome perks for sure, but they're typically not part of the pre-tax menu. All right, time for a really important part. Section 3, the rules of the plan. Now, I need you to lean in for this one because understanding these rules is absolutely key. This is how you avoid some of the common slip-ups that can cost you money. Okay, every great deal seems to have a catch, right? Well, for cafeteria plans, the big one is what everyone calls the use it or lose it rule. Now, the official IRS speak is all about not deferring compensation, which is just a complicated way of saying you can't save the money and roll it over year after year like a 401k. The bottom line is you have to use the funds you set aside within the plan year. If you don't, you forfeit them. It sounds harsh, I know. But just when you're thinking that sounds a little risky, hold on. That's not quite the end of the story. There's a really important exception to this rule. And that exception is called the grace period. Now, this is something your employer has to choose to offer, but it's a huge help. It basically acts like a safety net. It gives you an extra 2.5 months after the plan year is over to spend any money you have left. It's a fantastic little feature that really helps you avoid losing that money you worked so hard for. Let's look at how this plays out on a calendar, because that makes it so much clearer. So your plan year starts January 1st. It ends on December 31st. Let's say you've still got some money left in your account. The grace period kicks in and gives you all the way until March 15th of the next year to have new expenses and use up that leftover cash. So really, your 12-month plan just became a 14.5-month plan. It's only after that March 15th deadline that any remaining balance is truly gone. Okay, let's wrap this all up in our final section, why it matters. Because this isn't just about navigating some obscure part of the tax code. This is about real, concrete benefits for pretty much everyone involved.
For you, the employee, the advantages are just huge and immediate. First and foremost, you're lowering your taxable income. That means you pay less in taxes and, plain and simple, you get to keep more of your paycheck. Plus, it's an amazing way to budget for those expenses you know are coming, things like daycare or maybe new glasses.
But here's the cool part. It's not just a win for employees. Employers get some major benefits too. See, when your taxable wages are lower, your company pays less in payroll taxes. Things like their share of Social Security and Medicare. And in today's job market, offering a great benefits package with a Section 125 plan is a super cost-effective way to attract the best people and keep them happy.
So that really brings us to the final question for you to think about. Whether you're an employee trying to make every dollar count or a business owner trying to build an amazing team, could a Section 125 cafeteria plan be that missing ingredient you've been looking for to boost your budget or your business? Something to think about.